Welcome to INN CEO Talks. Joining me today is Jason Bahnsen, the President and CEO of Tempus Resources, which trades on the ASX under the symbol TMR, on the TSX Venture under the symbol TMRR, and on the OTCQB under the symbol TMRFF. Mr. Bahnsen is a Canadian-Australian mining engineer with over 30 years of experience in natural resources finance and operations. His career has spawned a broad range of roles in the resources industry. He began in mine development, working for underground mine contracting companies in Canada, Indonesia, and Australia. He's held numerous production role positions at several gold mine operations, including, but not limited to, mine planning engineer, project engineer, and shift boss. Now, after several years of working with Rio Tinto in Australia, Mr. Bahnsen was involved in mine feasibility study work and business development roles. He subsequently spent 10 years working as a resource banker. Following a successful career in banking, Mr. Bahnsen became involved in resource company development and has held CEO roles for several private and listed resource exploration and development companies. Jason, welcome. Thanks for joining me today.
Thank you, Stuart. Pleasure to be here with you today.
Your latest venture is Tempus. Tell us about that, and in particular, maybe let's start by talking about your Blackdome Elizabeth Gold project.
Sure. Blackdome Elizabeth project is the flagship project for Tempus. It's a gold exploration project. It's located about 200 kilometers north of Vancouver, just north of Whistler. So very good logistics, accessible project. Tempus, we acquired the project in 2019, started drilling on it in November 2020 at Elizabeth. We've drilled a total of 10,000 meters at the Elizabeth project and about 5,000 meters at Blackdome. Just to step back, these two projects, they're quite unique. They're two separate projects that are joined with a contiguous set of licenses or leases. So it's they're both exploration play. But Blackdome was previously in production, produced about 230,000 ounces at a very high grade. The point about these projects, these are high grade gold. So that was about 22 grams per ton was the historic production at Blackdome. And Elizabeth had no production. But at Blackdome, there's a fully compliant, permitted 200 ton a day mill, producing gravity concentrate and a flotation concentrate previously with the production from Blackdome. So the overall strategy with the project is to drill out the resource at Blackdome and Elizabeth. And then we really have a near-term sort of cash flow situation where we could bring these projects online quite quickly. As I mentioned, we've been drilling at Elizabeth over the last year. We have 10,000 meters of drilling, and there's an historic resource at both projects, but the larger one at Elizabeth, about 206,000 ounces at I think it's 12 grams per ton. Now that is mostly associated with one vein. The previous owners had done some drilling on it, but hadn't progressed it too far. Now, since over the past year, with our drill campaign, the main focus of the drill campaign was to increase the size of the resource from that initial 206,000, so on strike and at depth. And that's mostly associated with just one vein, the southwest vein. Now, we don't have any graphics here, so you have to work with me. But the southwest vein, let's say, currently holds approximately 150,000 ounces of the historic resource, which was done in 2009. This year, we discovered a new vein, 150 meters to the northwest from that also high grade. The discovery hole was 34 gram, 34 grams over half a meter. And just yesterday, we announced another hole at the two more holes at this what's called the blue vein that graded up to 71 grams. We had 13.4 grams over 2.3 meters. Or 2.7, excuse me, and within that, 71 grams over half a meter. So these are high-grade subvertical veins hosted in quartz, vary between half a meter, 6.5 meters in total width. So this would be a underground mining scenario, but with a mill, a fully permanent mill and associated tailings dam within 30 kilometers. So it's kind of a unique situation. So at the moment, we're focused on expanding the resource at Elizabeth. We have a couple more holes to announce that are coming over the next week, and these are for drilling that we completed at the very end of October. We're still dealing with 3 or up to over 3 months lead time on assays with the labs. But our overall plan is to come back in as early as we can in the spring, early summer. Last year we got in at the very beginning of June and start drilling again. Now we're going to come up with an updated resource this year. We wanted to include as much drilling as possible. That's why we didn't come up with the resource last year. But we'll be coming up with an updated resource on the project targeted this year. And from that, we'll progress with the sort of PEA. But because of the history of the project and that it was in operation before, we're able to concurrently with the developing the resource, expanding and fleshing out the resource, is tick some of the boxes on the engineering work, which would take a lot of lead time when we go to a sort of production scenario. So we've done a detailed metallurgical study based on some previous test work that was done using both ore from the Blackdome mill and the Elizabeth mill, two different deposits, that proves that there's no issues with recovery. We can expect up to 95, 98%, in that range on both the total recovery from. And so we're looking, we have GDS, a well-regarded engineering group based in Vancouver, that are currently doing a review of that. What is the capital cost to start up that mill? What would the lead time be? A very practical sort of, how do we get this into production sort of study. So is that your objective then, to get it into production, or are you looking at some kind of merger or vending in with the larger player at some point? Because investors are always asking that. Where do we go from here? Should you prove out the resource? Yes. Well, it is. We're certainly open to opportunities, and one of the things I really like about the location of this, we're in a quite a active sort of gold camp. We have Talisker just to the south of us. We have West Haven that just announced a resource a couple of weeks ago. So there's a lot of, synergies at the sort of corporate end. We could do a deal. There's also, it's a large project area. We got 315 square kilometers in total. And this is also has its perspective for copper porphyries. We have Barrick right beside us that has a project called Poison Mountain, an exploration project. That's a copper porphyry target. So we're in the right neighborhood. We got a large project. So, we are focusing on development of the veins. And, what I believe we're going to see here is, multiple veins, couple 100,000 ounces each. When we have enough to have critical mass for production scenario, that is certainly one avenue we could go with this as we continue to explore the larger property, for other significant sort of mineralization. We've done geophysics on it. First time it was done, modern geophysics, we did in June of last year. So there's a lot of potential to multiply these sort of current veins as we drill them out, move to a production scenario. If there was some other way to build it larger or a merger, we're certainly open to that. It's all about whatever creates, value here. How do we maximize sort of value in this scenario?
Right, and how are you positioned for money right now? Do you have the resources that you need to keep moving forward, or will you be going back and raising future funds?
We will be coming back to the market. We've raised a total of about $8 million last year in flow through and non-flow through, both in the Australian and Canadian market. And I guess with the dual listed structure, we have the flexibility to tap both markets, which is great because they can work on different cycles, different valuations, everything else. And that's for both flow through and non-flow through. Tempus was the first foreign company in Canada to do a 100% flow through deal. There's been others that have followed since, but we have over our financials are just coming out for the end of December, but we have about $2 to $3 million in cash, a combination of hard dollars and flow through. So we would look to increase that. Our total drilling, for example, at Elizabeth last year, we spent about $5 million on the drilling component at Elizabeth. So that gives you some sort of order of magnitude sort of guidance there. And we have our project in Ecuador as well. So we need some hard flow through dollars for that.
So we've gone over time, but what's the number one thing that you want viewers to take away from our discussion here today?
Well, I think, Tempus is a relatively unknown player here, particularly in the North American market. If we do some subsequent sort of raisings, we'll look to paper those in Canada, get some more liquidity in the Canadian market here. And I think if you look at these other comps that I've mentioned here, that are pre-resource effectively, Talisker, we look pretty attractively priced. So I think there's, that's really the upside here. We're in a high-grade project. We're developing a resource. We are fast tracking to a potential production scenario, and I think we're an excellent sort of buying opportunity.
Well, I hope that you're going to come back and give us updates because you've got a lot of drilling results that I guess are still coming in and future drilling, and I know the viewers are going to be interested to know what the next reports are going to be. So I hope you'll come back and join us again.
Pleasure. I look forward to it, Stu. Thank you very much.
Thank you.